Happy 11th birthday to the Bitcoin white paper. Yeah, happy birthday, Bitcoin. Happy birthday. It's your birthday, Bitcoin white paper. Yeah. On October 31st, 2008, Satoshi revealed the 10 simple pages that make up the beauty, which is the Bitcoin white paper. A few months later, of course, the Bitcoin blockchain came into life. Good times. Anyway, lots of juicy news for you today, so let's jump into our first big story. Bitcoin has just surpassed $1 billion in fee revenue for Bitcoin miners. That's a lot of money. In fact, Bitcoin mining has made a total of $15 billion in revenue for miners since 2009. That, of course, includes the fees that are paid out to miners, which just crossed $1 billion. Most, $14 billion of that, of course, came in the form of block rewards paid out to miners. But the economics of Bitcoin are changing. The coming 3 block reward reductions will be incredibly significant, since in 3 halvings, the block reward will be less than 1 Bitcoin. Fees will make an increasingly large portion of the economic incentive for miners as this happens. It's very interesting to see how this long-term vision plays out for the economics of Bitcoin. The next story is an announcement of a really cool new tool from the guys over at CoinGecko. They have released a new set of metrics that allow you to track the crypto derivatives markets. And the numbers are super fascinating to have a look at. It's actually it's so weird how everyone's paying so much attention to the CME, and are we gonna fill the CME Bitcoin futures gap, and what's the CME doing today, and how important the backed futures are, and why we should all pay so much attention to the highly regulated markets for, sophisticated people. Anyway, look, I get it. The regulated markets show how much interest there is from the big institutional players in the crypto space. And yes, that's certainly interesting, but we give it so much attention. And I want to put this in perspective for you, because I think this is really important to understand. The CME does around $150 million in volume daily on average. Some days they go up much higher than that. BYBIT did $1 billion in volume today. BitMEX did $3.5 billion in volume. So much attention is given to these suit and tie banker markets, and yet the open real world markets of people in, shorts and funky shirts, they're on fire. Personally, I love being free to long Bitcoin on BYBIT if I want to. Even if I could play on the CME, why would I? That's for old banker dudes. Anyway, I'll leave a link down below if you want to check out the CoinGecko derivatives page. It's got some pretty interesting insights on it. Now, a big story out of Russia turned a lot of heads this week. A Russian Bitcoin mining company is planning to open a new facility and intends to capture a whopping 20% of the international market for mining Bitcoin. That's ambitious, without a doubt. The Russian mining company plans to repurpose a metal factory, particularly an aluminum factory in Russia's northern province of Karelia, just north of St. Petersburg. The factory was reportedly closed due to U.S. sanctions in 2018. The challenge for them will be actually being able to secure enough hardware to do this. I mean, that's a lot of hardware to get that much hash rate. It's all good to say, hey, we're going to take 20% of the Bitcoin mining market. But actually getting your hands on that many devices is not an easy task, especially at a time when demand is absolutely red hot for Bitcoin mining machines. Also, if they were to capture 20% of the hash rate, that would require at least 15 terawatts of power, which is a mind-boggling amount of power. It's like the size of Slovenia's power consumption. And I'm actually suspicious if they can create that much energy. But they're using an old aluminum facility, and aluminum production is incredibly energy intensive, uses around 900 terawatts annually, the entire industry, with some countries having built their own hydro dams just to power one smelter. Smelter. Always liked that word for some reason. Anyway, of course this is an ambitious project, but this is not the only ambitious project out there. The last I checked, the project in Paraguay is still going ahead, which aims to be the world's largest single Bitcoin mine. Texas just made some massive moves with the announcement of 2 gigantic facilities, one of which is the Rockdale facility, which is currently the biggest Bitcoin mine in the world, and many other regions around the world are building gigantic facilities too. So I have my doubts that this Russian team will actually be able to capture 20% of the hash rate, but it does make a damn good headline, doesn't it? I wish them luck in their attempt to capture such a big chunk of the market, but the competition is pretty fierce out there, so anyway, we shall see. And of course, the more mining we get outside of China, the better it is for geographic distribution. If we can finally end that China controls Bitcoin narrative that we see so often thrown around. In other mining news, Bitcoin Cash had a bit of a scare the other day with an unknown miner grabbing control of 52% of the total hash rate on the network. Now, other miners have since stepped in to secure the chain and to change the percentages around so there's no longer one unknown entity controlling 52% of the network. But this story really does underline just how vulnerable both Bitcoin Cash and Bitcoin Satoshi Vision remain while they are not the masters of their algorithms. Now, this is also happening at a time when Bitcoin's hash rate has absolutely exploded, reaching new high after new high after new high, while both BCH and BSV are down around 60% from their all-time hash rate highs. Both chains are critically vulnerable to 51% attacks. Moving on to Korea. As China goes blockchain, South Korea is going crypto like a boss. The Presidential Committee has suggested the authorities to identify blockchain as an invincible trend and to render a legal status to cryptocurrencies. The committee recommends synchronizing the technology, data, and startup ecosystem to help encourage innovation in the industry in South Korea. The board urged the government to promote the employment of technology along with encrypted assets. Now, to be fair, this is only a suggestion from an influential entity. It's not a law passed into existence. But I really like that they are saying yes to crypto, and then they're not doing the blockchain, not Bitcoin thing that we see so often from so many governments. And let's round up our chat today with some total dysfunction from Bankville. Over in the USA, the Federal Reserve has cut rates for the 3rd time this year, dropping it from 1.75 down to 1.5. And a reminder, of course, that the Wall Street dumpster fire is still burning with $120 billion in overnight repo loans and a farther $60 billion a month in Treasury bill purchases. And to add to the general banking fun times, the U.S. Treasury Secretary Steve Mnuchin said on Tuesday that he is open to loosening liquidity requirements for big banks in order to relieve possible cash crunches in the short-term funding markets. Really? Because the banks, sure, they need more free rein to gamble, less liquidity requirements. I'm sure that's going to end well, just like it ended so well last time they let the banks run wild. Banks. Bitcoin is a hedge against the fiscal insanity of Wall Street and the Federal Reserve. Bitcoin doesn't do this crazy stuff. Over in Malaysia, the USA has told Malaysia that it must close the bank accounts of all Iranian citizens in the country. Doesn't matter if you're a student, doesn't matter if you're just some construction worker or a fruit company or a doctor. Maybe there's some bad people there too, but everyone is affected. According to America, you are not allowed to have a bank account in Malaysia. That's wild. That's wild. Why is Malaysia doing this? They're just bowing down. The long arm of Uncle Sam can get you anywhere. And this really sucks because this is not about targeting the government or government entities or any of that stuff. This is about punishing random people just trying to live their damn lives. And what is their crime? Being born in the wrong country. And they're not even living in that country at the moment. That's wild. Bitcoin fixes this. It really does. Bitcoin gives zero ducks about your nationality, about your religion, about your political affiliations, or anything else. Bitcoin makes no judgments on this. The only challenge, of course, is getting people educated about cryptocurrency and critically getting more and more people to actually be paid in cryptocurrency. And then, of course, for enough service providers, merchants to actually accept cryptocurrencies on the other side. And just as a little FYI for you, do you want to know who is pushing this through? Who thinks that regular people of certain nationalities are systemic risks to the global financial system and all this jazz? Well, it's our old buddies, the Financial Action Task Force. Yes, the same FATF that is pushing for the travel rule to be implemented across exchange and wallet services. That lets you know just what they have in store for crypto. If the FATF gets their way, there will be all kinds of funny business going on with censorship and gatekeeping happening at the exchange and at the wallet levels. Obviously, it doesn't affect the underlying protocols, but it does affect the fiat on and off ramps. Moving on to China, which is seeing another bank crumbling under the weight of bad debt. It is actually the fourth bank this year to require intervention from the government in China. Depositors of the rural lender actually swarmed the bank's retail asset outlets demanding their money. This is what you call a good old-fashioned bank run, folks. People are making the maximum withdrawals that they can daily, trying to get their money out of the bank before the bank collapses. The bank, in a desperate attempt to try and convince people to not withdraw their money, they're trying to say, hey, just keep your money in the bank. We're going to offer you higher returns if you keep your deposits in. They're even going so far as to offer people gift cards to not withdraw their money. Like, yo, you know your bank is in deep, deep duty when they're trying to bribe you with gift cards to keep your money in the bank. It's not a good sign. This is all just part of what is a wider liquidity crisis hitting a huge number of Chinese banks, as we've discussed previously on the channel. Of course, you add in the liquidity crisis happening in the US with the repo markets and the new round of quantitative easing that's definitely not being called quantitative easing, even though it looks like QE and it smells like QE. But you really get a sense for how deeply flawed the current banking system is with these kind of stories. And finally, in Argentina, the Central Bank of Argentina has tightened currency controls to an unbelievable degree. People can now withdraw a maximum of $200 a month. Now, this was a measure which was put in place to try to stem the outflow of foreign exchange reserves. The $200 per month is only via bank accounts, and the number for cash is just $100 a month. Now, the measure is supposed to be temporary until just the end of the year, but this is a particularly dramatic move. Previously, the restriction was $10,000 that the central bank imposed back at the beginning of September, which even $10,000, that was some BS, but you have to keep it real that the $10,000 limit affected a different group of people. But the new limits will hit everyone in Argentina. These kind of creeping restrictions, they just keep creeping. When you have your money in a bank, the bank controls your money. They control what you can do with it. They control when you can access it, what you can spend it on. You know the old saying, guys, your bank, your money, not your bank, not your money. The use case for cryptocurrencies is so incredibly clear and is growing every single day in prominence. Bitcoin is true, decentralized, permissionless, censorship-resistant money. And when you add on the growing list of decentralized financial services being developed on Ethereum and other blockchains, along with the exploding fiat stablecoin space, you start to realize that banks and their levers of control and their arrogance of being the masters of the universe, those guys are being put on notice big time. Remember, according to the McKinsey report, that half of the world's banks are currently facing extinction unless they upgrade their technology significantly? Well, you know what? Bitcoin is the freaking meteor. And Ethereum, Monero, Cardano, and others, they will be the ice age, cleaning up whatever Bitcoin doesn't kill. Anyway, thank you guys so much for watching today's video. As always, I totally appreciate it. And you guys frickin' rock. I hope that you're going to have an awesome weekend out there, whatever you're doing, of course. If you did enjoy the video, make sure to leave a thumbs up on it. Let me know what you think about any of these stories down below in the comment section. Thank you so much for watching today. Long live the blockchain. And peace out till next time.